side of things, and a bit more fundamentals in the dollar index. So the dollar's been making some new highs, right? Broke past this supply zone, and as I always say, there's no real level of there's a technical level that's going to stand in the way of really fundamental analysis. What you're supposed to do is understand your fundamental bias before looking at a price chart, and then understand where you are in a price chart secondly, and see whether you're at a cheap or an expensive area. Now the dollar seems to be appreciating, and the reason why is because Fed officials stress the need to keep raising rates to cool price. We've got some central bank, but some investment bank analysis that talks about the 105s to potentially the 107s, 108s as well. Technically, probably looking at this area here, but the more that the markets price in more Fed hikes, is the higher the dollar should go, and again in the short term. And we also have this viewpoint from HSBC Bank talking about the market reassesses its view on Fed rates, and that's due to rising in the short term. Possibly, I think, if again the data supports that narrative, should push the dollar either to the 105s or at least at the limit the 108s, but by the end of the year, or towards the summer and into the autumn and winter months, I think the dollar should want to decline. So with that being said, I did say in the group that if you did want to be long on the dollar, that's not a bad idea in the short term, definitely not. So waiting for any kind of pullbacks right into a demand zone. Of course, you're not necessarily trading the dollar index. You'd be looking for a pullback into the the dollar pair, the dollar cross, and then just looking at this as confluence really, and on the dollar index as a pullback, and then just pull the trigger on a dollar cross like the dollar yen or dollar Swiss, if that's what you want to trade. Or if prices do come back down to the 101s, and there's really no reason for it to come down to the 101s. So when I say no reason, for example, the Fed is still quite hawkish in terms of their rhetoric, and inflation is still sticky, then I think this is actually going to be a decent bargain to look to buy the dollar. If you are looking to sell the dollar, then I would say probably the highs, maybe the 105 round number, 105.50s is probably where you want to start to look for any kind of sell trades to short the dollar. But the dollar is going to be a bit of a tricky one for now. But I think the momentum really, and I don't really like using momentum, but I would say I would probably lean more towards the dollar appreciating in the short term than I would do devaluing in the short term overall. Again, as long as the data continues to support that narrative. So moving on to the dollar yen, and the dollar yen. Given what we've just said about dollar, the yen, I am actually bullish on the yen, but I've taken a bit of a back seat on this trade. I do think this is a really nice technical level to look for any kind of short trades, but with dollar potential strength, you could see obviously this reverse, but maybe not as much as you might hope, depending on obviously where your entry is, and your stop losses and what your risk reward is, right? But I do think that if you want to get long on the dollar yen, this is decent. I think that the Japanese yen at the moment, their nominated new governor, I think his name, you pronounce it Udia. He's actually neutral when it comes to whether he's hawkish or dovish on policy, and so I think the yield curve control should be coming to an end, and monetary policy should be coming to an end. But I think that is probably going to start to gather pace, probably more towards maybe March, April. And I say March, April, like March is a while away. March is probably about another week and a half away. But probably towards March, April, if I think any moves to maybe the 137s, I think are very good shorting opportunities. And again, as long as we start to get the rumor that the yield curve control monetary policy is going to change for the Japanese yen. There's been a lot of forecasts talking about, again, going back to maybe the 126s, 128s, and so the higher prices go, this exchange rate goes, I think it's decent shorting opportunity. Or if, again, in the short term, if you get any pullbacks into that demand zone, I think that's a decent long opportunity. Dollar Swiss. My bias would be to go long on this pair. If you're looking to buy the dollar, one of the pairs that I would buy if I'm buying the dollar against any pair, one of them would be, for example, the Swiss franc. You do have some demand right here, and I think any pullbacks into this lower demand zone, the 91 area, I think is going to be decent for a buy, especially just below around the 0.90, so that's the 90-cent area. I think that's actually really nice technical buy for the US dollar over the Swiss franc. If you think the Swiss franc is a bargain somewhere, I would probably say maybe up to the 94s, 94.50s before looking at getting short. But personally, I would probably look for, in the short term anyway, any kind of long trades on that dollar Swiss. If you're looking to buy the dollar, same thing with the dollar CAD. I think the dollar CAD, is a decent buy if you're looking to buy the dollar. So any kind of pullbacks into this lower zone, the 132.50s, I think is going to be seen as actually a decent bargain for the US dollar. The Federal Reserve is still hiking rates, and the Canadian dollar actually are still looking to hold rates, and that is as long as inflation isn't a problem in Canada, it doesn't become a problem again. And so central banks typically don't, once they start to hold, or once they start to, start to cut rates, it tends to be a cycle. So they tend to do, their policy for a duration of time, meaning that if they're going to hike, they tend to hike, 2, 3, 4 times. If they're holding, they tend to hold for, a good maybe, few quarters. And so I do think that this might actually be, the beginning of a potential uptrend for the dollar CAD. If you get a pullback down to these areas here, actually I think it's quite decent for a potential buy. New Zealand dollar, US dollar has come down to this nice technical level, the 62s. The New Zealand economy is going through, it had a bit of a natural disaster. I think it was cyclone, cyclone, it begins with G. The name begins with G. I can't remember exactly what it was, but yeah, which kind of devastated some of the country. The RBNZ, the Reserve Bank of New Zealand, are making their monetary policy, and they're expected to hike by 50 basis points. But due to the natural disaster that recently happened, there is talk that they actually might hike by 25 basis points, so lower than expected. If it comes out lower than expected, if they hike by 25 basis points, I think the New Zealand dollar may start to sell off, especially as the US dollar is actually starting to hike, being priced in a bit more hikes than what was expected. So ultimately, I think this pair, I'm not necessarily trading this pair, but if you are, there are supply zones there if you want to be a buyer of the US dollar. So you're looking for a pullback into this zone here before looking at getting short. And if you're looking to get long, I would probably look for a fresher area of demand, as this level has been touched once, twice, 3. This is the third time. So anything around that 0.61 area, any fresh area of demand, is a decent area to look for a buy trade technically. Pound dollar, and the pound, we had some news regarding coming down a bit more. Yes, there are hikes, but not as much hikes, so that has to be priced in. So I do think that any pullback into a supply zone around here actually is a decent area to look for short trades. I am looking for prices to come up to here if it can, and get short around here for various reasons as well, other than fundamentals. And so for me, if I was looking to buy one or the other, if I'm buying the dollar, the pound would also be a top contender for me to look to to short against the dollar, or buy the dollar against the pound. Euro dollar. So the euro dollar and Europe is still quite hawkish, one of the most hawkish central banks at the moment when it comes to interest rates. And this is because short term, maybe a month or two, with the dollar being repriced in terms of, they're hiking a bit more. I'm looking at potentially buying in and around this 106, 105 area. I do think the dollar will have a bit of a ceiling to its appreciation. And when you have two central banks actually hiking at the same time, what you should have is more of an agreed auction, right? Fair value auction. Some people know it as a range or sideways moving market. It's actually known as a fair value auction. And I think the fair value auction should be really between this high and this low. So I think toward the 106, 105 areas, if we can get down there, I think that's going to be really nice for a potential buy for the euro. I'd expect prices to start to auction from around there. You do have a a supply zone right here. But personally, I wouldn't necessarily look at that as a strong supply zone. I would probably look at that more as this area here would be the area I'd look for any kind of short trades. Although this is definitely an option here intraday wise, I would probably look for trades more around the 109 if I was looking for any kind of short trades. But my bias is still long on that euro, so that's where I am. Australian dollar, US dollar. The Australian dollar hasn't had great news at the moment. I think employment wise, the data came out and it wasn't fantastic, but I think the market is looking past that. Although obviously with the US dollar strengthening, you could probably see prices come down a bit lower. But I think overall the Australian dollar is a buy, and in fact I'm going to analyze the Aussie Swiss and a trade that I took, a profitable trade that I took last week, to give you an idea as to the type of trades that we look for in a kind of a breakdown. But if I'm buying the Australian dollar, which I am, but I'm not doing it against the US dollar because I think overall the dollar, again, their interest rates are being repriced, which kind of strengthens the dollar a little bit. I think overall, if we do get a bigger pullback, China reopening, I did mention it again. Was it here, right? So one of my concerns, I said, a counterforce to dollar appreciation will be China reopening, risk on, and if that continues, China will be the Australia and the Australian economy will be a beneficiary of China reopening and China economic strength. Commodity prices, will rise due to Chinese demand and infrastructure and investment. And so I do think any pullbacks are decent buying opportunities, but just right now, I'm very cautious on the Australian dollar, US dollar when it comes to buying in and around here. Although many will recognize that as a potential for a stop hunt in that area, but I'm gonna, sit out. I think my main plays on the Australian dollar are the Australian dollar and the Canadian dollar, and I'll get to that. Sorry, I should say my main place to buy the Australian dollar would be against, for example, the Swiss franc and the Canadian dollar. So we'll get into that a bit later. Gold, again, pulling back due to dollar strength, and so again, this demand zone didn't play out. We do have an area which is okay, but I think the better area to look for gold, if you're looking to buy gold, I think probably down towards the 1800s, just a bit further down, would be a decent technical level into that demand zone. But again, this is, you're buying gold based off of potential dollar strength. So if you think that the US dollar is going to weaken, right? So if inflation actually is coming down, and the Fed are less likely to, hike, 3 or 4 times rather than 1 or 2 times, then you want to be a buyer of gold. But if you're looking at, buying the dollar, because the Fed are looking to, continue to hike interest rates, then gold may start to come down a little bit, right? And again, going back to the DXY, if the dollar index starts to go up to the 105s, 106, 107s, then you have to expect gold to probably come down to somewhere around these 1800s to even like the 1760s, 1740s may actually be a decent area to look for a pullback to buy gold. Plus, gold is due for a very deep pullback because we've just had this almost, I wouldn't say parabolic one, but we haven't had really a decent pullback on gold. So when you get moves like this, where you get kind of shallow pullbacks, what tends to happen is you get bigger pullbacks eventually, right? So you get a move probably down to this area, this 1740. I wouldn't be surprised if prices came down to those 1740 areas before potentially looking at going higher as the dollar index, if prices come up to the 107s, 108s, starts to go lower. So there's that correlation there. And so my trade of the week, I'll break this down, not in too much detail because it would be unfair on the guys who are actually in the room for me to reveal everything that I do, of course. But just the Australian dollar, Swiss franc took this trade and it was a profitable trade. And so really the fundamental bias is to buy the Australian dollar against the Swiss franc in a risk on environment, right? So first of all, we're in potential risk on, or more risk on than risk off, which would mean, again, with China reopening, there's zero COVID policy. I'm going to definitely favor the Australian dollar. The Swiss franc are definitely, their central bank are hiking rates still as well. So it's not, a perfect divergence, but just on from a risk on perspective, the Australian dollar is really tipped to be one of the buys for 2023. And so all I'm looking for really is just pullbacks, on a daily time frame back into this demand zone. Brilliant. Now, I have no idea whether prices are going to reverse here. Nobody does, right? But when prices pull back, and if the market agrees, that my entry is the absolute bottom, then brilliant, I'll make some money, right? Make a decent amount. If it doesn't, then and it pulls back even more and gives me an entry, then I'll get in right here, right? That's really how, to trade, or the idea behind trading fundamental analysis is just understanding where the bargains potentially are. And so when we look at this trade, prices had really kind of come down to this demand zone here. And so I'll go down to like a 4 hour, and I entered into a few positions, managed to get into 3 positions. And so the blue lines right here, right, are where my orders were, right? Well, where my market order was at, and I'll zoom in a bit more. So it was at 0.636. I had one at 0.6355, and then I had another one at the absolute bottom, which was 0.6350, and I had a 15 pip stop, which is about here from that absolute low. So I had 3 orders. Now you can see that all orders got filled. Right, the top one, the middle one, and the bottom one all got filled with price, and the bottom order, ended up going for at least a 3-to-1, but I took that off at actually a 2-to-1, which was somewhere around here. And also as well, what I do is my orders are I get heavier as prices go down, meaning that the top order, right? You've got 3 orders, and if you're looking to be a buyer, then the top order is 0.1%. Yeah, the second order is 0.2%, and the third order is 0.3%. Yeah, and so with that, if I get filled in all 3, my total risk is going to be 0.6%. of that. So not every trade is going to be 0.6%. It depends on what price actually does. But if I'm fortunate enough to get in all 3, then my maximum risk on this trade is going to be 0.6, and I'll let the market dictate that, right? And that's my maximum loss as well. Now on this trade, Yeah, I managed to get in on all 3 positions, and with a 2-to-1 on my 0.3 position, this lower position at the 0.635, I managed to do a 2-to-1. So now my reward is 0.6. Yeah. So now I'm swing trading. I'm actually swing trading these 2 positions, 0.3%. on these 2 positions, and even if I lose these 2 positions, yeah, the maximum I'm losing is 0.3, which means that in fact I cannot lose on this, because ultimately my profit now I've banked is you know, at the worst is 0.3%, yeah, on this one trade. But the maximum amount I can make is you know, I mean, unlimited really, but my ultimate goal is for, you know, prices to actually reach to the highs of this auction here. So I have a lot of upside potential on this if I'm right about this fundamentally against the Swiss franc. But if I'm not right about this anymore, and the other 2, you know, prices come down, then this is still a profitable trade ultimately. So at the moment, this is where I'm swing trading, and that's really kind of a breakdown of the trade. And so so yeah, that's really one of the trades I'm in this week. There was a couple of others actually that I am in. I'm in on the CAD yen and a couple of others, and so let's see how that goes. But I thought that this would be a decent breakdown of this trade, and really how, you know, I approach the markets and how I manage my risk and my trades, so you can get a bit of an insight as to you know, how we actually trade at Trading 180. Anyways, guys, that is it for this week. I hope you have a great trading week, and yeah, I will see you in the next video. Stay blessed, and cheers, and thanks for watching. On to is actually a decent concept, which was what makes the pound or any currency. Can you judge a currency's value based off of historical or technical levels? Now, I would believe that the answer is yes and no. Yes, insofar as it's a reference point. Yeah. So let's say, you know, this, and I'll go to a live chart, make it a lot easier, right? Let's go to a live chart. It's a good, technicals are a good reference. So if we zoom out to the weekly, right, let's zoom out to the weekly, get rid of everything on the price chart. Now, if you've gone through the course, you will know that what I say is that at some point, this is obviously deemed a bargain area for the pound, right? This was a bargain area. For the pound back in 2020 during the pandemic. Yeah, brilliant, excellent. Now, as a reference point, the question then becomes, is that a bargain now? Yeah. Now, price, just looking solely at price, it would suggest that it is a potential. Of course, none of us know, but we don't. Well, I don't base my analysis on what bargain is. A bargain is based off of price, because price is not a reflection of value. Yeah, I mean, it can be, but typically you need to know, you know, how what a currency or any asset, how it derives its value, and it's not through really looking at price. I understand, 100% understand that it was a bargain here, so it could be a bargain there. But on deeper reflection, what drove prices higher here for the pound, yeah, may not be the same thing that drives prices higher here for the pound. Yeah. And so let's say prices come all the way down, have come all the way down here. Now, let's say, for example, I don't know, Rishi Sunak was the person that ended up getting prime minister, and his policies would have been totally opposite, you know, from Liz Truss's, obviously, because he would have ran on different policies. And let's say, for example, the market thought that his policies were terrible. Yeah.
for the pound. Because fundamentally, you know, we're looking at, you know, the fundamentals, right? That's what we're looking for, is to derive value, not price. So although we can look to the left and see that it was a bargain 2 years ago, it's not the same thing. The reasons for the pound going higher is not going to be the same as today. And so, and B, fundamentally, we need to know what's going on now, which basically, you know, makes us understand why price should go lower or beyond that point, or actually if the pound is actually a bargain down here based off of what we understand about fundamentals. Yeah. So just because something is seen as, for example, the dollar might be seen as expensive, does that mean that the pound is cheap? Does that mean that the pound is cheap? That's the question to you guys. It's not a rhetoric question. just to get, you know, your feedback. No, exactly, it doesn't. Something can stay expensive forever. And also as well, who's to say that this is expensive? Exactly. It's two different stories. That's exactly it, first of all. Now, had this, let's say, for example, this wasn't a weekly chart. And let's say, for example, this nice little price action had happened, let's say, for example, 1 month ago. Yeah. Let's say it happened 1 month ago. Now, it's easier to determine whether anything has changed fundamentally when prices come up to or down to this point. So let's say, for example, the Bank of England, let's just go into fantasy land, and the Bank of England now have decided that they want to, you know, everything is lovely with the economy, right? GDP is growing, everything is wonderful, right? They're growing, going into the, you know, expansion phase of the economic cycle, and inflation is trending away, and you know what I mean? Everything is brilliant. And then you start to see this happen. Yeah, prices are going, you know, against the pound. Yeah, but the scenario that caused price to go higher here has not changed. Yeah, so GDP is good, everything is good, central bank is hiking into strength, all of that. Does this now look like a bargain, or does it not? Today, right? Month ago, and nothing has changed, by the way. Nothing has changed here. Yeah, we're still, scenario fundamentals are still the same. Exactly. It does look like a bargain now, right? Yes, in fantasy land, exactly. Right. So, but and this is the point. This is exactly the point. Whatever drove prices here and caused traders to buy, yeah, price is not value, and value is not always reflected in price. If you can understand that the banks want to buy at bargain prices, and you're not looking at this and scratching your head and going, oh, well, why? Rather than just looking at it like prices are coming down. This is absolutely a fantastic buying opportunity because nothing has changed fundamentally from like a month ago. Then this is a bargain. Yeah. So great, you know, I'm thankful for Edwin for highlighting this and going through the conversation. And I think it's a really important point. It's a very, very important point that, you know, we should make. Yes, price, like I said, typically we know that to be a bargain or an expensive area, but it doesn't mean that this is going to be a bargain based off of just typically what price has done there. We need to know the fundamentals and what risk sentiment is and what the central bank is doing, etc. That's what is the most important. So more things to go over. We've got loads of things to go over. And something is very important as well, which is, but if I lay down and I play dead and I stay dead, maybe